Markets are full of distractions, but if you can read the structure, you can stay ahead. Welcome back to Your Nifty Guy. I hope all of you are doing well. This is a channel where I simplify trading and help you plan your next move with clarity and confidence. If you find value in this video, don't forget to like the video, share it with your trading friends and community, comment your thoughts on the video, and as well as subscribe to the channel if you haven't already. Your support helps this community grow. Let's decode the market for tomorrow. As usual, the video will be divided into two parts. The first will be what we did today compared to what we had planned yesterday, and then we'll jump to the second part, which will be planning the trade setups for tomorrow. And while we are doing so, we will also be talking about market structure as well as trade setups that I personally use in the markets and something which has been proving beneficial to me for a long, long time. And I keep the trading plan extremely simple. So just follow along. Today was again an extremely sideways day. So first, I have been saying this about since a lot of time because we have been getting these big range candles or trending candles on daily time frame, and that is after a trending move, a sideways move usually comes in, and that is the reason I had been telling that I am anticipating a sideways market, and I had also been advising to keep your quantities extremely low. If we look at the first 5 minutes candle, if you mark the high and low of the first 5 minutes candle, except for this and except for this part, the market entirely was today inside the first 5 minutes range. So this is what is typical of a sideways market. Now, I did take a trade today, which I got out almost cost to cost. Now, we had planned that we will be going above this particular high, we can create a long entry, but then we had also planned a trap setup, which is we wanted a bullish candle, and once the low of that bullish candle gets taken out, we can prepare a short entry. We can plan for a short entry. Now, this candle, although I would have loved if this candle would have given me at least 20 more points of move before closing, but still, what I will think of this candle as okay, this opened with a gap up, went down till this low, but then again managed to come up. So you see this large wick which is there. So what I said was the color of the candle does not matter. What it needs to show me that, okay, this candle is a positive candle, and then there have been fresh new entries which have taken place in this candle. Right. So looking at the candle, you will be able to judge if it's a profit booking candle, if there is fresh new people who have entered the markets on this candle. So this long wick suggests that, okay, there are people who would have entered fresh in the markets at this particular point. Now, this low became critically important for me. After this particular low was there, which was critically important for me, I looked at the market structure which formed consecutively. So markets gave a low here, lower high, mind it, a lower low compared to previous low, again another lower high, and once it broke down below this particular low as well as the day's low, which as per me was the trap setup. Although I would have see there are certain conditions wherein I would have wanted this particular breakdown to be much more sooner in the day rather than it came back almost 1 hour after 1 hour 15 minutes of trading. Had it been around these this time or at the start of the day, it would have been a much more high probable setup. But nonetheless, keeping in mind the bullish nature of the first 5 minutes candle, then the kind of consolidation that we were in, and also a double top breakdown here, multiple things, plus we were below the level which we had marked, wherein we had planned for a short entry till up to these levels. This is where I entered a short trade. But as soon as market reached this particular swing low, it gave a bounce back. And on this hammer candle, I got out almost cost to cost. I will be glad if the profits that are showing in my Zerodha account would be able to cover up the brokerage charges, right? So that is what I call it's almost a cost to cost exit. Post that again, I had drawn this particular trend line as well. And markets actually did break out from here. Trade could have been taken around here, but again, market did not give any pullback. And as you know, we do not trade breakouts and breakdowns without any valid pullbacks. And since there were no pullbacks in this particular move, we did not trade this particular pullback. Now, post this particular move, you can see there is no clear market structure. The lows did break down immediately going into up on the upside. And again, around here, what I was thinking was that because the day high was had broken out, and then the people who would have shorted here would have been trapped. But then I wanted it to give me another good high probable swing and then this low to be taken out. So the swing did come in around here, but this low was not taken out. So had this been taken out, yes, another short trade could have been planned around here based on a, again, a trap setup wherein people who would have longed the markets around this level would have trapped, and post this particular swing low was taken out, we could have planned a short trade. But again, that nothing actually what happened on the price action part. Why do I still discuss those scenarios is what I'm trying to explain is what are the thoughts that are going on in my mind while in the live market, right? While in the live market, what since once this high was taken out, okay, after this trend line was broken out, I was waiting for a pullback wherein I can take a long entry. No pullback, no entry, no problem. If the price action does not move as per the setup, if it is not giving us a pullback that we need to create an entry, we will not be taking any long entry. Even if you were to take a uh, long position just after this particular breakout, where would you have been putting a stop loss? It would have been around here, which is a pretty big stop loss as per me, 771 to 844. No doubt you would have gotten your rewards, but that is something which this scenario will happen once in a while, but most of the breakouts will not be functioning like this. So it is always better to stick to your rules and let these be rare instances, be something which you are giving away to the market as a uh, as an opportunity cost that you are missing out on the market, but nonetheless you are saving your hard-earned capital. And what I believe is in the market scenario that is currently going on in the Indian trading world, saving your capital is much more important than making or booking those profits. Definitely, you need to take your chances. Like I did take my chance around here. And in case this particular low would have been taken out, this would have been a bumper and jackpot trade while my SL was just around here. And I had taken the entry here and the SL was just above this particular swing high. But as soon as the market reversed from here, forming a good along bullish pin bar kind of a candle. Now, again, these are names given to the world of candlestick trading. For me, the sentiment matters, right? So from here, the markets had created a new high, and once again, once it reached this particular zone, markets again created a new high. So this zone is kind of acting like a support right now. But the moment this candle formed around here, I did not hold on to my position, but I exited it because it was not a picture perfect trade. It was a, I will say, a 50-50 probability trade, but still, you got to take your chances in the market. And that is what I did exactly. And then post that again, as you can see, there is no clear price action or market structure that we so dearly follow. And that was the reason no further trades were taken. So today, only one trade, which was also almost cost to cost. I hope it will cover the cost. I'll check the contract note once it reaches my mail in the evening. Now, for tomorrow, we'll be deleting this. We will be deleting this as well. This was just an intraday line. We don't need this on the charts. If we look at now, follow the price action very, very closely, or the words that I'm about to say very, very closely. Today's candlestick has given us a reversal candlestick pattern. What is the reversal candlestick pattern? These are three conditions which I look at. On the daily time frame, the low of the today's candle is higher than previous low. The high is higher than previous high, and even we have got a closing which is higher than previous high, right? The previous high was around here, and we have got a closing which is higher up above this. This is the same system that I use for trailing my positions when I am in a trade which is already in some good profits, and that is how I trail. I need these three conditions to be fulfilled in case if I am in a short trade, and in case in long trade, the opposite of it. So again, this is a reversal kind of candlestick, but on a daily time frame from this particular swing high, since the time that we have broken this, we are still below the zero point 0.5 to 0.618 zone. So in my opinion, this particular zone, which is roughly 24,920 to 25,000, will act as a strong resistance. I hope the reasoning is clear to you guys. Why will this particular zone be acting as a strong resistance is simply because this is on a daily time frame still. Plus, do not forget 25,000 is a psychological round number, which again is a good enough reason for uh, it acting as a super strong resistance. Tomorrow, also being the monthly expiry, there will be a lot of activity happening around the round figure of 25,000 levels, which is there, and that is something which we will be looking at. So before we plan the trade for tomorrow, word of caution to all of you. Anybody who is into trading Nifty, who is into option buying, and who will be trading the monthly expiry tomorrow, please make sure to shift your entire day's trading to the next week's expiry options. Do not trade into the July monthly expiry option, which are expiring tomorrow. You might be paying a slightly higher premium or entry charges for your position that you make, but you will be thanking me later for the same, as this will be a major capital saving simple adjustment that you can do, but can help you a lot in the long term. And again, tomorrow is the monthly expiry. Somebody who does not know, there is a monthly or a weekly expiry setup that we use, which is based on the open interest and change in open interest. And that is something which we look at post 2 p.m. on all expiries. And in case if we see that there's a huge amount of call writing or put writing at certain levels, and we see that people are getting trapped or they are moving out of those particular levels, we can see either a short covering or a long unwinding, depending on which side the price is moving. And that can give a good hero zero trade. So those are the only trades post 2 p.m., a single set of trade. If the open interest is reflecting something, the price is planning to trap somebody, is which is what we will be looking at planning at in the current week's expiry options. Otherwise, we will be shifting all our trading to the next week expiry options. I hope the point is clear for anybody who is not familiar with the video or the concept of the expiry trading setup that we use. You can go back to the June monthly expiry video that we had posted for. I'll just give you a quick. Would be the, yeah, 26th of June video would be the one which has the thumbnail, also has the monthly expiry special mention. And that is the place where I had explained that particular setup. So you can go ahead and watch that. For tomorrow, again, this level will be changing. Let me first adjust this level. Right. So I'll be looking at a short opportunity based on price action around these levels. Below this, we can look for a short entry. And once we are planning for a short entry, we'll be looking at booking our positions around these levels, or we'll wait for price action around these levels, because once this level is taken out, again, there can be a little bit of trapping on the, because the day's low is also close by. And once people are, maybe if people are trapped around here, if we see a positive price action around here, we can take a long entry. Below this is we are short. Above these levels, not necessarily tomorrow, but above these levels, we will be going long. Mostly, I will suggest you to avoid trading in this particular zone. Do not take even these trades, because the expiry volatility can be there, but markets can remain sideways as well. So we'll be preparing for all the probable scenarios. The best scenario would be, again, markets opening flat to gap up and then getting a resistance from these levels. This is where we can plan to go short. Now, if at all, the one scenario that we discussed on the daily time frame is of a market reversal based on a daily candlestick 3 point pointers that we look at the high, low, and closing. In at all, this is a reversal. We can also plan for a long entry above this particular above today's high. But in case if I am planning that long entry above today's high, I will be doing it in extremely small quantities. And in case if price crosses these 25,000 levels, that is where I will be looking at adding on to the quantities. But I believe this trade might be a riskier bet. So new traders or traders who are not good with taking exits, and people, once if you feel that you are trapped in a position and are waiting in hope, do not take this trade. But in case of that particular daily candlestick, which is pointing a reversal, if we take that into account, that scenario being playing out, yes, we can definitely plan for a long trade above this candle high with a pullback. That will be kind of a safe entry. But then again, this zone is a major resistance zone on a daily time frame, on a 75 minutes time frame, on a 4 hour time frame. So this is where I will be observing the price action very closely, and I will be trailing my position very tightly with a very strict stop loss and in lower quantities, right? So I hope the video and the analysis is very, very clear for all of you. And yeah, so I will be seeing you guys tomorrow post the markets. Please stay safe in the expiry, the monthly expiry trading, and stay tuned for tomorrow's video. I'll see you guys again tomorrow post the market. Cheers and thanks for tuning in.